Hi, this is Tom Hoskins for Mining Journal. I'm here today with Mark Brennan, who's the CEO of Cerrado Gold, which is a precious metals explorer listed in Toronto with an operating mine in Argentina and another development stage asset in Brazil. Hi, Mark. How's it going?
Well, Tom, thank you.
Excellent. Well, without further ado, I just want to hear a little bit more about your company. Where's the bulk of your energy focused at the moment? I know the Argentina asset came on stream fairly recently, but from what I understand, you're concentrating more on Brazil for the time being.
We see the main value driver for shareholders being in Brazil. The Monte de Carmo project we essentially acquired in 2018, which was the first asset that created the company Cerrado. This is a very exciting project where we have 1.3 million ounces of resource. We're just about to complete a feasibility study by the end of the first quarter of 2023. And we're hoping that this project will be a substantial producer of gold and amongst, if not the cheapest gold producer in the world. So that's taking a lot of our attention. However, we are focusing and spending a lot of time in Argentina on a production asset, which is Minera Don Nicolas, or MDN, which basically is targeted to produce between 45 to 55,000 ounces per year this year, and growing. But both assets are, irrespective of the fact that Argentina is in production, it's still a very new and it's a development asset or discovery asset, I'd say. And so we're still, since the acquisition of the project in March of 2020, we're still embroiled in really figuring out what this mine's going to look like when it actually grows up. So, we've been focusing on things such as life of mine and the areas that we're going to mine and how we're going to mine it, whether it be open pit, underground, heap leach, and so we're just kind of working on that now, and hope within the next year we'll have a much better understanding. But for now, we're targeting 45 to 55,000 ounces per year.
Okay, and on the Brazil asset, on Monte de Carmo, where are you at? I think there's a feasibility study not too far away. Can you talk a little bit about when we can expect to see that?
Of course, we're going to complete the feasibility study in the first quarter of 2023. We will also file our environmental impact assessment before the end of this year. And so our expectation is that we will be in construction by Q3 of 2023. We did a PEA, which was completed in the fall of 2021, and it's probably amongst the best PEAs I've ever seen, where basically on an after-tax basis, we had an NPV of $612 million US, with a IRR of 95%, producing 150,000 ounces per year in the first 5 years of an 8-year mine life, at a cost of $431. So it really is quite a special asset. With again, it's a discovery asset with plenty of room for growth, and our target here is to build the mine, expand the resource simultaneously, and hopefully grow and expand the production base.
Okay, and so obviously it's the market's pretty tricky at the moment, and this is it's going to be costing you to develop it. What are you like from a cash perspective right now?
Well, right now we're pretty comfortable. We're sitting approximately around $8 million of cash and cash equivalents, and basically, we expect that cash, if we were to reduce our expenditure programs on drilling, et cetera, would last us through the feasibility. We have been working on a couple of funding opportunities, which we hope could be imminent. One imminent, and a second one which could be certainly before the end of the year. But the interesting thing is that we actually had a stream, took down a stream with Sprott, stream and royalty company, in the spring, and basically for $20 million. But what was included there was their interest in actually looking to provide us with between $40 and $60 million towards the development of the project, which means we could, in the worst case scenario, we could acquire conventional debt, and use the stream, an additional stream, which the project could absorb, to pay for the equity component required. So technically, we are funded to production. or we could be funded to production. Excuse me.
Okay. And back to Argentina for a second. Can you talk a little bit more about the operational enhancements that you're considering there?
Yeah, I mean, the mine was put into production in 2018. We acquired it the day of COVID lockdowns in March of 2020. So it took us 18 months to really restructure, and it was a very significant restructuring within a very difficult operating environment with lockdowns and border shutdowns, et cetera. But in terms of where we are now, is we're looking. It has traditionally been producing in at around 25,000 ounces. We took it to 42,000 ounces last year. Again, this year we're targeting 45 to 55,000 ounces. We've announced that we're going to add a heap leaching opportunity, which would add another 20,000 ounces next year. This asset, even though it's in production, is still very much a new development asset. And so we're looking how to optimize the future of this mine, whether that be through open pit as it's been, whether it's been through heap leach, which we're going to add next year. And we've also looked at underground. So we're looking to find the optimization of those three strategies and to create a significant mine life and economic project moving forward.
Okay, great. So, I mean, we've touched on the projects and what stage they are. I think the last remaining angle to look at is the team. This is an industry built on reputation, and have you been there and done it? Can you talk a little bit about your track record and some of your key team members as well, please?
Sure. I mean, I think the team like to think of ourselves as builders first and foremost, and basically the team came together in the early 2000s in 2002 with the Jacobina project. Kurt Mencken was the general manager for Jacobina for Anglo, then became the general manager and president of Jacobina with a company called Desert Sun. Desert Sun was started by us in 2010 as founding members, and at a market valuation of about $20 million. We sold it to Yamana for $700 million in 2006. It remains one of Yamana's best assets. Subsequent to that, we went to Largo Resources. Largo, we've built now into what would be $1 billion company as the cheapest, highest grade vanadium deposit in the world, also in Brazil. And so we built that pretty much on time, on budget. Subsequent to that, I went and ran and restructured a company called Sierra Metals. I was there for 2 years, and we took it from a $200 million valuation to just under $600 million valuation. And then we all came back together for Cerrado and the Monte Carmo asset. So we've got a very, very strong team, whether it be in the technical side, the financial side, the geological side. All sides are covered here. We're thrilled with the group of professionals that we have, and I think we're all like-minded in the sense that we are builders, first and foremost.
Okay, fantastic. Well, I'm afraid that's all we have time for today, Mark. But thank you very much indeed for joining us.
Tom, thank you very much for your interest. Really appreciate it.
Not at all. And I wish you all the best with the feasibility study and the rest of your work moving forward. That concludes this video for Mining Journal. We'll see you all again next time. Goodbye.